What exactly is going on? Crypto doesn't look too bad today, but one token tends to underperform, and that is Raydium, the leading decentralized exchange on Solana. Why is it doing worse? It's not just today, it's also this week. Raydium has been the worst performer this week, and the same is true for this month. Those are the top 100 cryptocurrencies in terms of market cap. Does it potentially make sense to buy this bottom? Because in the end, crypto is all about buying low and selling high, and obviously currently we are not very high. Now here's a chart that shows how much capital is currently locked up in the Raydium decentralized exchange. And we had our nice DeFi summer when the total value locked went to 2.1 billion. Then we had a massive collapse. This is when Terra Luna went bust, also when FTX went belly up, and then 1 year of nothingness, and in 2024 a massive rise with the meme coin speculation frenzy. A top of almost 3 billion, but now we are coming back down. We are already at 1.5 billion, a bit less than that. And the argument that Raydium is going down just because all of crypto is currently going down is not warranted, because all of crypto didn't go down as much. This is the total value locked of all of decentralized finance across all chains. We haven't seen a new high with the recent rally in 2024, but the drop had also been way less pronounced compared to what we have seen with Raydium. Now here's another argument: because Solana itself went down, of course the assets on the Raydium exchange go down as well, but even measured in SOL, we have seen a drop. It's not as pronounced, it's maybe 25% or so, but it's definitely a withdrawal of capital. Now here's the problem. Solana had been the main beneficiary of the bull run, right? Even Donald Trump launched his meme coin on Solana. But because of that, it's now also the most sensitive to a potential turnaround in case we now start a bear market. All of that trading volume, all of that attention was fueled by short-term speculation. It's 100% player versus player, and that's not just a luck game, that's also based on skill. So the people that are very skilled in meme coin trading, they tended to accumulate more and more money, and the people that aren't that skilled, they lost their money. So now the capital is concentrated in a few hands, and that makes trading volume go down. And again, it's not just trading volume, it's also capital itself. We see red across the board. So this is the total value locked change in the last month for the entire blockchains, and Solana is leading the pack, unfortunately. Almost 40% of value got destroyed, got removed from Solana. Ethereum saw less than half of that contraction. The Binance Smart Chain got barely touched by this down movement. And the reason, of course, again, is meme coin trading. Solana is pretty much 100% used for meme coins. Raydium is the leading decentralized exchange on Solana. Here are the trending tokens on the chain ordered by the liquidity pool size, and it is all pretty much meme coins. There's only Jupiter over here at number 13. The rest is all meme coins. By the way, of those 3.6 billion trading volume in the last 24 hours, Raydium covered 1.9 billion, so a bit more than half. But we are going to look at this in more detail in a second. Short-term trading and meme coins and Politify, those were the crypto categories that performed the worst in the last week, and probably also in the last month. Now Solana mainly grew with the Pump.fun ecosystem, right? So this is a launch pad for meme coins on Solana. We can see the momentum around that platform in this chart here. This shows the number of deployed transactions on Pump.fun. It peaked in November of last year, then contracted a bit, then a secondary rally in January, and now we are coming down rather quickly. At one point, we had been above 70,000 deployed transactions on a single day. Now we are down to 26,000, so a contraction of 2/3. Here's the daily fee and revenue generated by the protocol. It's also going down very quickly, also from roughly 20k down to now 8k, a contraction of 60%. So this is contracting faster than the total value locked on Solana even. But let's go back to Raydium. What we've got on the left is the number of daily active users of Raydium, a very sharp decline in the last 2-3 weeks. And the same can be said for the number of new users. there's a real crash happening. So the price decline is somewhat justified, at least when we look at the usage of the protocol. Have a look at the decentralized exchange trading volume. So the US dollars that move every week. It peaked at almost 70 billion and last week was at only 27 billion. The current week isn't yet over, so we can't take this data point too seriously. The DEX liquidity, interestingly enough, didn't go down that quickly yet, but I think it will very soon, because this is how decentralized exchanges work. On the one side, we've got the traders. On the other side, we've got the capital providers, right? The liquidity pool providers. Now, when people trade very actively, when a lot of trading is occurring, then the liquidity pool providers get a lot of return because they get a fraction of the trading fees. When trading goes down in volume, then the return for the liquidity pool providers is very, very low. Thus, it's incentivized to just withdraw that liquidity. And so I believe that this DEX liquidity here is a lagging indicator of the DEX trading volume. If the DEX trading volume continues to stay low, then this liquidity will also get withdrawn. This is not necessarily a Raydium specific issue. It's an issue with the Solana chain, because have a look at the liquidity share across the different decentralized exchanges. Raydium has not lost market share. It's pretty stable at around 50 to 60%. Now, I always like to look at relative valuations, right? It's always interesting how much more return or how much less return do we get by buying an altcoin over, say, Bitcoin or over Solana, for example. When we buy a more risky altcoin, we should also expect more return, right? Why else take on more risk? More risk should get compensated with more dollars long term. And so this is the Raydium chart relative to the Solana chart. And initially, Raydium underperformed Solana massively by 95%. Now, where did this underperformance come from? Here's the answer. We've got a long-term price chart over here, and we've got a long-term market cap chart over here. There's quite a bit of difference between those two charts. And the reason is that the market cap reflects also token inflation. So there's more and more Raydium tokens floating around. And that's why the market cap of Raydium was able to double, while the price is very far away from doubling, right? It only went half the way to where it had been in 2021. So there was probably roughly an expansion of the Raydium token supply by 4x during that time period. That's then, of course, what depresses the price. But since October of 2023, things turned around. And this is also when liquidity started to move into crypto again. Have a look at this. This is the stablecoin market cap over time. We had the crypto market contract in 2022 and the beginning of 2023. But then in October of 2023, we suddenly started to see money flowing into crypto again. So this is when traditional finance deployed their fiat into crypto. The stablecoin issuers started creating or minting new stables. And that's then also when Raydium was able to start outperforming again. Currently, it seems like we are not yet at the bottom, right? We see this massive crash, but it would not necessarily be surprising to see still another 25% more underperformance versus Solana. And Solana is already getting hammered in this bear market. And so here is how I see the macro picture. It looks like over time, more and more capital is flowing into Bitcoin because people start to understand that most altcoins tend to underperform Bitcoin most of the time. On top of that, we've also got two kinds of capital inflows. We've got the inflows through the Bitcoin ETF. We've also got the inflows through the centralized exchanges. Traditional finance or Wall Street isn't getting much more crypto exposure besides Bitcoin. They're simply just focusing on BTC. And so that's then what's causing this chart here. And this is the Bitcoin dominance, a very long-term chart starting in 2016. Sometimes Bitcoin is a lot of all of crypto, and sometimes the altcoins rally a lot and Bitcoin underperforms. So when this is crashing down, this means we've got an altcoin season. Isn't it interesting how altcoin season tends to happen when Bitcoin's dominance is above 70%. So it tended to peak at around 73%. Currently, the Bitcoin dominance is only at 61%, and we are growing slowly over time, again, mainly fueled by the ETF and by people just getting tired of active trading. Have a look at the return of altcoins in the last 90 days. Most altcoins did not do that well. The question is, at what point here do we see Bitcoin? The answer is Bitcoin is at place number 26. So only 25 out of 100 altcoins outperformed Bitcoin. All the others, so 74, underperformed Bitcoin. When we look at the numbers for the last year, it's very similar. There's only 20 altcoins that outperformed Bitcoin. So again, most altcoins tend to do worse than Bitcoin over time. Really, there are two ways to make money in crypto. Either we try to find the needle in the haystack, right? The one altcoin that does a multiple X return. And during a bull market, this can be a viable strategy, especially if we've got a lot of on-chain analytics. But during a market that is not expanding that quickly anymore, it's a very, very dangerous game to play. The second approach, and the much less common approach, is to get the odds in our favor, not against our favor. So we don't try to find the 25% that outperform. We just bet on the 75% to continue to underperform. So we bet on falling prices of altcoins that we think are especially weak. For example, here, right, I've shown this several times on this channel. This is the Balancer altcoin, so that's a decentralized finance token relative to Bitcoin. And this is a very constant underperformance, and we can make money with that underperformance. In the last year, Balancer underperformed Bitcoin by 75%. This can be alpha. We can make money 75% in a year when we bet on Balancer doing worse than BTC. The reason for the underperformance is of course tokenomics, and this is why most altcoins do so poorly. Over time, the early investors and the team gets token unlocks, right? They get more and more allocation that they can then sell, and of course after a while they do sell, right? After years of development and after years of waiting, they do sell the allocation, and that then makes those altcoins do worse compared to Bitcoin. Of course, when all of crypto is going up, then the altcoins go up as well in US dollars, but they don't go up more than BTC. That's why we see this long-term underperformance. And so I made various tutorial videos on that approach, right? On not trying to find the one lottery ticket, on simply just compounding money high and consistent over time. So this is how to win in bear markets by shorting altcoins. There are more than 100 tutorial videos in total. This is all part of premium. It's not just all about betting on falling prices. It's also about risk management. It's also about portfolio allocation. It's also about on-chain analytics. So feel free to check it out. It's currently $125 US per month, and there's also a 1-week money back guarantee. So in case you don't like premium, just message me within the first 7 days. Feel free to binge watch all the videos. Message me after 7 days, and if you did not get enough value out of it, I'll refund you 100%. Really, zero questions asked. There's zero risk for you. Looking forward to seeing you again here on YouTube. Feel free to also give this video a like. It helps the channel grow, and of course, see you also in premium. Cheers.